It's Tubbergen here with an economic video update. Today is Monday, March the 12th, 2018. I want to talk about today tariffs. I write about this in this week's Portfolio Watch also. And I have up on the screen in front of you an article published in Bloomberg Politics to be exact. Trump clarity on tariff conditions, not what EU was looking for, is the title of the article. This was published March 10th, which was Saturday, just a couple days ago, and updated yesterday. I'll give you just a bit from the article, and then I've got a couple of comments. Hours after European Union Trade Chief Cecilia Malmström said she had no immediate clarity on whether the bloc will be left off the hook from planned U.S. tariffs, President Donald Trump laid down his conditions and repeated a threat if they're not met. This is a tweet from Trump. The European Union, wonderful countries who treat the U.S. very badly on trade, are complaining about the tariffs on steel and aluminum. If they drop their horrific barriers and tariffs on U.S. products going in, we will likewise drop ours. Big deficit. If not, we tax cars, etc. Fair. Trump's response came after Malmström on Twitter described what she called frank but fruitless talks with a U.S. trade representative in Brussels. Now, what about all these tariffs? Well, Trump has said something else that I want to comment on also, and I'm going to pop up my my Portfolio Watch issue from this week. History does repeat itself. This reminds me a lot of the studies I've done in different time frames economically when private sector debt levels got high and countries were fighting for trade. And although the economy seems to be ticking along pretty well, on other updates, I've talked to you about the fact that debt levels around the world have gone from about 140 trillion around the time of the financial crisis to about 230 trillion today. There will be consequences from that, and we're starting to see the fallout. I write in this week's Portfolio Watch, in the early 1930s, protectionism and trade wars were the political theme like they are once again today. In 1930, then-President Herbert Hoover signed the Smoot-Hawley Tariff Bill, which imposed tariffs on imported products. Now, the whole idea, like the idea today, was to protect U.S. businesses and farmers. Now, the Foundation for Economic Education has a great article on the subject, and I've got the link on the screen here, so I'd encourage you to go check it out. The article discusses some of the fallout or consequences of the Tariff Act. A few bullet points here. U.S. exports dramatically declined from $7 billion in 1929 to $2.4 billion in 1932. That's a decline of about two-thirds. Farm incomes collapsed as export markets dried up due to foreign retaliation. Rural farm banks in the Midwest and southern states failed by the thousands because farmers couldn't pay back the loans. Worldwide retaliation against U.S. minerals decreased income in mining states and might be at least partially responsible for the Wingfield chain of banks at that time. Iron and steel exports decreased by 85.5% by 1932 due to retaliation. Pittsburgh, which was in the heart of steel country, saw its 11 largest banks with $67 million in deposits close in 1931. U.S. auto exports fell from $541 million a year to $97 million a year, a decline of more than 80%. Not coincidentally, the Detroit banking system was in complete collapse by 1933. Now, all these events had a significant and negative impact on the economy and stocks. Now, President Trump recently tweeted this: when a country, parenthetically USA, is losing billions of dollars on trade with virtually every country it does business with, trade wars are good and easy to win. Example, when we are down $100 billion with a certain country and they get cute, don't trade anymore. We win big. It's easy. Now, this $100 billion down that the president is referring to here is a trade deficit. And if the U.S. is down $100 billion, it means the U.S. is buying $100 billion more in stuff from a country than she's selling to that country. Now, a trade war just means that both countries end up selling less to each other. Nobody wins and everyone loses. We learned this in the 1930s, but it seems now we have forgotten. Jeffrey Tucker said it really well. He said, you could say you have a trade deficit with a local gas station. You're constantly buying their gas and cigarettes while they're not buying your consulting services. So what? The point here is that there is mutual benefit. If some thug tried to prevent you from shopping here, you're not made better off. You can learn a lot about today's economy and financial markets by studying history. Your history professor was right. History does repeat itself. We believe that these tariffs will not be good for the U.S. economy. That's today's video economic update. It's March 12, 2018. My name is Dennis Tubbergen.